When investors hear the term value fund, it's often simplified as buying low PE stocks, but in reality, executing value it requires discipline, patience, and a clear process. So, could you walk us through the investment strategy of UTI Value Fund? How it defines value, balances valuation with business quality, and construct a portfolio across different market conditions.
So we primarily use three levers to create the to focus on portfolio construction. The first lever is sector allocation, which is completely driven by valuation filters. We focus on investing in sectors where valuations are attractive, and we also look at the operating cycle or valuation cycle of that sector. We try to avoid narrative-driven sector allocation. As you can see, we moved over. So the chart reflects how we use valuation at a sector level to increase or reduce exposure. For example, in automobile, we have been very conscious about valuation and increased sectoral exposure when valuations were reasonable. And we have been consistently having a very significant underweight in capital goods sector over the last 2 to 3 years, completely driven by valuation approach. So we look at implied growth to judge growth-oriented sector valuations, how they are placed as compared to their history in terms of growth and what is the market price implying. And in asset-oriented sectors or asset-heavy sectors, we focus on price to book as a valuation benchmark. Just to put it in context, in the last 1 year, our sector allocation to BFSI and IT be, would, would reflect our primarily focus of sectoral allocation based on valuation. Also, the recent profit booking in metals is driven by the same process. When valuation moved up significantly, we turned from a significant overweight to a underweight. The second lever which we use is what we call a asymmetric barbell approach. And that asymmetry comes from our favor to value and give a much more value tilt in terms of stock picking. Here, we buy both growth and cyclical stocks. But when we are buying cyclical stocks, we try to execute a contra strategy by investing in stocks which are going through temporary profit and loss issues, no balance sheet concern. The issues are largely driven by the cycle, and we try to buy stocks when they are on the where they are in the down cycle, as far as cyclical stocks are concerned. As far as the growth-oriented stocks are concerned, on the other side of the barbell, we try to buy stocks which are available at reasonable valuation and have a long runway of growth as far as growth-oriented stocks are concerned. But what we focus in on both the side of the barbell is to buy stocks where expectations are low or expectations are reasonable. We don't chase stocks. We don't focus on chasing momentum. And actually, we avoid buying momentum-oriented stocks. The third lever is to invest across market cap, large, mid, or small cap. We find wherever the valuation is comfortable, we try to change our market cap allocation. But this lever is not being used very frequently now. Although we think that large cap valuation are much more comfortable than mid and small cap, our allocation to mid and small cap has been pretty much in the 30-35% range over the last 1 to 2 years. One important point to note here is that we have allocation to durable sectors, which is largely a small cap oriented sectors, which is going through the cyclical low. Also, frequent changes in the market cap capitalization, which are 6 monthly, also distort the market cap exposure numbers. So, but these are the three levers which we are using to construct the portfolio. Stock-specific valuation is important at the time of entry, whether it is on a relative basis or absolute basis or based on history. But exit depends on many other factors, including valuation. So we do not just exit stocks because valuations have become relatively more expensive. We want to participate in the entire valuation journey of the company if we have identified the stock in a reasonable or a cheap valuation, rather than exiting the stock at the first sign of valuation comfort. So we run a more nuanced kind of a value fund, having a nuanced approach. Uh, our strategy is to deliver consistent return and avoid the heightened volatility often seen in fully cyclical portfolios.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.